In today's video, we're going to answer the question, can I qualify for a primary residence mortgage when I already have rental properties and mortgages on rental properties? So let's get into it. Now, a little bit about myself. My name is Koukun. I'm a real estate investor now for 9 years, and I work as a realtor, and I run a real estate team here in the Niagara region, and I've been doing that now for the last 5 years. What I am not is a mortgage professional. So I'm not a mortgage broker. I'm not a mortgage agent. Everything that I share in this video is just from my own experience as an investor and as a realtor, helping my clients navigate some of these challenges and working with different mortgage professionals to get the best answers to them. So before we begin, the one unique thing that we have here in Canada is the stress test when it comes to qualifying for mortgages. So this makes everything harder when it comes to qualifying for your primary residence mortgage, when it comes to qualifying for rental properties. And what it is that there's a minimum qualifying interest rate of 5.25%. And as of more recently, we are now qualifying at the rate offered by the lender plus 2%, because now rates are probably around 5.25%. We now need to qualify at 7.25%. So whichever is higher is the stress test that is used. So something to keep in mind. But to answer the question, in my own experience, last year actually, I purchased my primary residence, the home that I'm filming this video in right now. At that point, I owned 3 properties personally. I had a couple of joint ventures, but I wasn't on title, I wasn't on the mortgage. There were 3 rentals that I was on the mortgage, and it amounted to approximately $1.2 million in terms of outstanding mortgage debt. I then purchased this primary residence for $480,000, and I had to get a mortgage of around $388,000, roughly 80% of my purchase price. So that increased my total mortgage debt at that time to $1.6 million. To be very frank, if I were to purchase a property, especially at that time for $2 million and ask a bank to give me 80%, which is $1.6 million, I highly doubt I would have been approved for that much of a mortgage based on my financial situation, based on my income. I don't think that was an option. However, because I owned rental properties and I was purchasing a primary residence that was somewhat affordable, I was able to get it approved. So let's dig into why. When it comes to owning rental properties, there are 2 ways the rental income can help you qualify for more debt. So the first is what's called a rental add back. The second is a rental offset. These are the 2 ways your rental income is going to help you qualify for more mortgages and more debt than you could possibly qualify just on your own income. So first, the rental add back. This is when you add a percentage of the rental income to the rest of your income. And I'm going to give you an example to show you how this works. For example, if there is an 80% rental add back, here's how it would work. Say, and this is actually an example of mine. So I owned a property, I had a mortgage of $400,000. My payment at that time was about $1,600 a month, and the rent, it was a duplex, it produced $3,000 of income. Of that $3,000 of income, I could use 80%, $2,400, and add it to my income. So, for example, if I had a household income of $100,000, we would add $28,800, which is $2,400 times 12, right, for the year. So then it would increase my total income by that rental income. So I'd have $128,800. My mortgage payments for the year is $19,200, so $1,600 times 12. And this mortgage payments divided by my income creates a debt ratio of 14.9%, roughly 15%. So the impact of owning this rental property went from 0% to 14.9%, just as an example. So obviously it is affecting my ability to qualify, but it is offsetting it slightly. For example, if we had no rental income, then this would be closer to, say, 20% roughly. The other way that you can increase your ability to qualify is known as the rental offset. So with a rental offset, we use a percentage of the rental income to subtract it from your rental expenses. This makes it very different in how it affects your debt ratio. So same example, 400,000 mortgage, except we have what a common one, I believe, with Scotiabank, which is a 50% offset. With a 50% offset, what ends up happening is your $3,000 of rent, we cut that in half. So you only can use $1,500 of rent to offset your mortgage payment. But here's how the ratio works. Instead of adding to your income, your mortgage payments of $19,200, you subtract $18,000, which is $1,500 times 12, so that what's left over is only $1,200 a year. That $1,200 a year is now the debt payments you have. Divide that by your income of $100,000. Your impact from owning this rental is now only 1.2% in your debt ratio. So you can see how, obviously, first of all, you need to have cash flowing properties. It is very important that your properties can cover its expenses, because that's what allows you to continue buying rental properties and gives you the flexibility to upgrade your home or even purchase a primary residence. If you buy negative cash flowing properties from the get-go, it is going to be tough to qualify for further mortgages. Some of the tips I would recommend checking if the lender you're using uses rental offsets, because that may be a critical reason why you may be declined at some lenders. And if you are declined at a lender, always check with other lenders to see if you can get some better options. There's a few lenders that work with investors, and I would specifically look for mortgage agents and mortgage brokers that understand working with investors, because they will understand the rental offsets that their bank provides in more detail and can possibly give you an answer even faster when you're going through this process. The final tip for those of you who are student rental investors, Airbnb investors, the income from these type of investments most of the time is not considered in these kind of debt ratios. In some cases, a lender will consider that the property has zero income and just add that mortgage to your debt ratios. Some of the better lenders will simply do a market rent assessment as a single family home and subtract that from the mortgage payment. So again, the additional income from student rentals and Airbnbs most of the time will not help you, but a single family rent, a duplex rent, a multifamily rent, those will definitely work in your favor. So going back to our real estate investing framework, this is what our company does in terms of helping our clients. This is our framework. So we always look for good homes in good neighborhoods. We look for a margin of safety, which is the cash flow that our properties produce. So a big reason why is, as you can see, it helps you qualify for more mortgages. And the third part that we really believe in when it comes to real estate investing is to do nothing. So when you own a property that's a good property, you hold it for the long term. You don't flip it. You don't try to sell it and buy something else. For the most part, you hold on to the investments you hold, which will create long-term benefits as a real estate investor. So finally, if you are someone looking to purchase a home, one of the things that we've created here at Team Koukun is our house hacking profitability calculator. So this is when you purchase a home with a basement apartment or some additional space that you can rent out. This calculator allows you to calculate your monthly payments, your monthly expenses, and the house hacking strategy is actually a strategy some lenders will allow, where you can use some of the income that you'll generate from the property that you're going to live in to help you qualify for a larger mortgage. So for example, if you're right on the cusp in terms of being able to qualify, this may be a strategy to consider in order to qualify for the home you want to purchase. So if you want this free copy, the link is in the comments below, where you can get access to our house hacking profitability calculator. And if you have any questions, feel free to comment below. Until next time, all the best.